Hello, this is Adina from Immigrant Finance. Today I'm going to be speaking about the fear of losing money when it comes to investing. Now, this is a reason why many people don't ever start investing because they're afraid that they will lose their hard earned money. It's a very understandable concern given that there's nothing guaranteed when you do invest. But I want to talk about how to overcome that fear or at least think a little bit more about it so you're making an informed decision whether you decide to start investing or not. And one of the reasons this is so important to talk about is because if you don't know those pros and cons, and if you don't make an informed decision when it comes to investing, you could potentially be making a decision not to invest for reasons that may actually not be real or not be true. When you step back and look at, statistically what goes on in the market and understand how it works. So it's important to learn about this so that you can make sure that you are not missing out on investing and building wealth if it is something that you ultimately decide is right for you and your family. Now, there's going to be some people who just, knowing all the pros and cons, say it's not for me. I'm not comfortable with any risk, and that's totally okay. I'm not saying those people should still invest if they don't feel comfortable with it. There's other types of investing besides the stock market that could be a better fit for people in that situation. For example, real estate investing or investing in starting their own business, investing in their own knowledge and education, right? But today we're going to talk about when it comes to stock market investing. If you are having those fears of losing money coming up, but still want to invest, we'll talk about how you can overcome them or have a little bit more knowledge going into that decision so that you can make the right choice for you and your family. And I want to make sure that there's no one who is not investing for the wrong reasons, basically, who, if they had known more, they would have chosen to invest. Because for people in that bucket, if they never start investing, because of these fears without really learning more about the fears and what's really going on, the people in that situation are going to miss out on major opportunities to be building wealth for their families, and it can hurt them in the long run because investing in the stock market is one of the primary ways that people build generational wealth. And having more knowledge about how it works is power. It just allows you to make a more informed decision. So, I'm going to tell a quick story about my husband, Mao, and I's experience with investing and our fears about it and how we worked through them. And then I'll go over three lessons that you can take away when it comes to thinking about fears of losing money and investing in the stock market. So, to begin, when we began our financial journey, this was back in 2013 when Mao had just immigrated to the US from Ecuador. If you go back and listen to episode one, you'll hear all about our financial journey and how we were really struggling to get by paycheck to paycheck. We had no idea how to get out of our situation, and we were really had no pathway for building wealth. We felt very stuck. That was the beginning of our journey. And as we got into our journey and started learning more about the basics of personal finance, we started learning more about investing and seeing how important it was for building wealth and how there really wasn't any way to compete with investing by, having your money in a bank account, for example, or other pathways. So, we were afraid to start though. We knew we were interested in building wealth and we wanted to learn more about investing, but we were really afraid to lose our hard-earned money. We had very little money. There was a while we didn't have any extra money to invest, and only when we began budgeting and taking our personal finances more seriously did we learn how to free up some extra dollars that we could put toward our financial goals, like investing. And so when we had those extra dollars, they were very few and they were very important because we had never had extra dollars before and we were terrified to lose it. A lot of that came from scarcity mindset, of this fear of not having enough that is very common for people when it comes to money. Most of us have to deal with scarcity mindset at some point, and it's really hard to work past. So we were terrified that we would, invest the money and then the market would crash and we'd lose everything, and we would not only have nothing, but maybe even go in the negative or go into debt because of it or something. And this was especially true for Mal, who is from Ecuador, because in his community there, people really don't invest. There's not a system that is accessible for people in the middle or lower classes to be investing in the stock market there. And so it was a very um, new concept for him. I was privileged in that I am American, and I knew my parents had been investing. I knew a little bit about it. I remember when I was young, I was very privileged, and my grandmother gave me $100, for some birthday and told me to go buy a stock with it. And so that was her way of trying to teach me about investing. I made a very poor decision in what I invested in, but it was, a good learning experience to start to understand how stocks work. And he was coming from zero. He had no experience like that. He was going to be the first in his family to be investing, which is the case for most people that we work with in immigrant finance and most people in our community. They're the first ones and they're trying to figure out a loan. It's very overwhelming. And we certainly relate to that because that was definitely the case for him. Like, all of these terms were completely new. And even though I had that little bit of exposure from my family, it still all felt new. No one had actually taught me about investing or how to do it beyond just like that $100 gift from my grandma to go buy a stock and see what happened. So we were really learning from the beginning, and we wanted to find a way to get out of our situation of being really broke. And we wanted a way to have a pathway to build wealth, to have a plan for retirement. We were both on very low incomes and really didn't have any current strategy at the time to be prepared for retirement or having a family or any of that. And so we knew we had to figure this out, but we were really afraid. We were scared, like I said, to lose the little that we had and had worked hard for. And so what we had to do was start learning more. We realized that we had to educate ourselves, and that if we didn't start investing, our money was not going to grow. In fact, it was going to lose value every day just sitting in a bank account because of something called inflation, where the value of the dollar goes down every day with time. And so we understood that we were just going to have to learn as much as we could. And then after that, we could make more of an informed decision of whether it was right for us to be investing. And so we studied it a lot. We spent probably a couple years reading everything we could on investing, trying to educate ourselves. We did get to a point where we were like, okay, we're still scared, but let's just try with a little bit and see how it feels. And so we would just start putting every month a little bit of extra money we could find into our investments. And we had no idea what we were doing. So we were like learning as we go, which honestly sometimes is a great way to learn. But it only makes sense if you're doing it with a small amount of money. You don't want to be reckless and not know what you're doing with all your life savings or your family's life savings. So we were testing out strategies, we were researching and all of that, and we started to see our money grow. We started to see it actually grow a lot, and this was really, really exciting. So one thing that happened then is, because the stock market is cyclical, it's constantly going up and down in the short term. There were periods when it would go down, and we really would freak out because we would be like, "Oh my God, we are losing all this money we made," and we would get really scared. And so, because of those experiences, we started learning about how the stock market works and understand and that this is actually normal when the market goes down. It's like I said, the stock market is cyclical. And if you zoom out and you look at a broad view of the US stock market as a whole, you will see that it's actually been going up steadily over time. So in the short time, it's going to go up, down, up, down, up, down when, on a daily or weekly or monthly or even yearly basis. But overall, if you're investing for the long term, for retirement, for building wealth, for your children's education, for your family's future and building generational wealth, in the long run, those investments are going to steadily be going up. That's what it looks like if you research images of the stock market over the past 100 years. It's drastically grown steadily over time. So we started learning that we had to understand the difference between the short term and the long term with investing. And then we had to accept that in the short term, it would go down sometimes, and that is expected. And that's very, very important so that you don't freak out when it goes down. The biggest problem people have with investing is not understanding what I just described. And so what happens is when the market goes down, as it always does, at the short term, sometimes over time, people will freak out and they will sell everything. And that's when they lose money in the stock market, because they are selling off their investments when they're at a very low price. And they probably bought them at a higher price. So they lose money, right? But if they had just understood, if people just understand that over time in the long run things will go back up, and they always do go back up. They went back up after the 2008 housing crash, they went up back up after the Great Depression, they went back up after the economic crash we had in March 2020 from the COVID-19 pandemic. If they understand that, then and just ride it out and don't sell their investments, they're going to be fine. So that's what we had to learn, was to emotionally get control over our behavior when it comes to investing. And I always say 99% of investing is psychological, just like all personal finance is, really. So we had to learn that when the market goes down, just ride it out, not to sell stuff. If anything, if you are in a more sophisticated place of investing and you know what you're investing in and you have a strategy and you understand how that market moves, that's actually the best time to buy investments, because things are on sale, right? So we started to get a better handle on all these concepts. And what that led to is us feeling more comfortable with investing. And so those fears that had initially been holding us back from investing in the first place and really preventing us from being able to build wealth, we were able to reframe how we thought about those, because those fears came from a place of not being quite informed or knowledgeable about how things work. And fear often works that way. When there's gaps in our brain of knowledge and we don't understand things, fear will slide in and take over and try to keep us small and try to prevent us from growing, right? And so a strategy that's really helpful with investing or anything where you don't have a lot of knowledge and you're scared, is to just learn as much as you can and expose yourself, and try to understand how things work, because then you can make more informed decisions. Once we were able to understand how the market works more and how investing works, those fears got a lot quieter when there were times when our investments would go down when the market goes down, because we understood what was going on and we understood that we just needed to ride it out. And that's allowed us to be in a place now where when the market goes down, we will actually try to buy more investments because they're at a lower price. And then when the market goes back up, they will be worth a lot more. They'll double in value or whatever. So that's been a development through our journey as well. We went from first being able to just not sell things when the market goes down, and try not to freak out, even though we were freaking out, but just try to not take action, to now we don't really freak out when the market goes down. And if anything, we're like, let's buy, like things are on sale, discount shopping. So that's been our experience and story with working through these fears. It's really come down to having more knowledge. So the three things I want to share with you all and anyone who is thinking about investing, interested but scared and having these fears, is to, like I said, first of all, just learn more, familiarize yourself, demystify it, start looking up the definitions of investing words you hear that are confusing or you don't know what they mean. A lot of this with investing is they try to make it sound so much more complicated than it really is. And I have some conspiracy theories about why that's that case. I tend to believe that the financial system makes it more complicated to keep certain people out, to make it inaccessible, for the majority of people. It also can be a reason why people will go pay financial planners and investment firms to handle their investments for them, because they don't understand. And then people who do that end up losing a lot of money because they have to pay very high fees to those planners. So it's much better to just familiarize yourself and learn more and learn how to do it yourself. You can totally learn how to invest on your own. And that's something that we help our students with in Immigrant Finance School. We make sure every student by the end of the program understands how to invest, has their accounts open, and knows how to be investing on their own for the rest of their life, so they don't have to pay some financial planner to manage their investments for them every year and give away those fees, because that money they're giving to the fees really should just go more to their investments so they can invest more faster and build wealth faster. So that's the first thing, is just learn more, start looking stuff up, get support if you need it. The second is to understand how the cycles of the market work, as I was describing, to get more familiar with understanding how the market in the short term will go up and down, and that's expected and totally fine, but over time it's going to be growing. And so what you can do to feel more comfortable with that is just start getting in the habit of looking at stocks. You can use, if you have an iPhone, you can use the Apple Stocks app. It's a free app on all iPhones, and just put in some of the most common indexes out there, like the S&P 500 or the total stock market, the Dow Jones, which are funds that really track the market as a whole, so you can see a big picture of what's going on, and just start watching it time to time, and you'll start to see, like, oh, there was an economic crisis, it goes down, then it goes back up. Or, oh, there was some big political drama that happened, it goes down, then it comes back up. Taxes just went up, okay, it goes down, goes back up. So you start to see, like, kind of psychologically how the market responds to the economy, to politics, to law and policy. It's all very interrelated. And you will get more comfortable because you'll start to be able to expect how things are going to move. And it will all just feel more comfortable and normal. The third thing is to find a community that can give you support when the market goes down. So one of the best things that people can do when the market goes down and they're freaking out and they're feeling the temptation to go sell off their investments is to go talk to other investors and to have a community of people who will support you and be in it together and remind each other not to freak out and sell off their investments. So there's lots of different investing communities out there on the internet you can connect with. If you know people in your community, in your family, in your friend group who are investing, you can make your own support group for that. If you are an immigrant and you don't really, or a family member of immigrants, and you don't really know anyone else who's ever invested, or the first in your family or in your group of friends, Immigrant Finance School may be a good community for you. We have a really strong alumni network that stays in touch in our Facebook group. We have a private Facebook group that supports each other when these things happen, where you can reach out for support really for the rest of your life. So I hope this has been a good overview for you all who are having those fears when it comes to investing. Just to sum up, the three main lessons are to, first of all, learn more and familiarize yourself with investing. Second is to start to understand the cycles of the market and start watching them so you can get more comfortable seeing how the cycles happen. And the third is to find or create a community for support for when the market goes down, so that you have a plan on how to respond. Thank you so much. I hope you have a great rest of your day. Take care.